Bank of Canada cuts interest rates to 4.75%, 25 basis point cut for the first time in 4 years. I bet that's literally the sound that every real estate owner is making Canada-wide, because it's been a really rough ride, and I think what this signals right now is that the worst is behind us from an interest rate perspective, but I don't think the market's going to rebound the way that I think most people will think or want to expect, right? Finally cuts interest rates after 4 years. I think a lot of people are kind of relief, but I'm going to kind of explain some of these little highlighted bits on the importance of this freight cut, what it signifies, the sentiment change, but some of the hurdles that the real estate market is still, good encounter, right? So the first thing I have highlighted here are Bank of Canada's governor at his remarks, where he says if inflation continues to ease and our confidence that inflation is headed sustainably towards a 2% target continues to increase, it is reasonable to expect further cuts to policy interest rate, but we are taking our interest rate decision one meeting at a time. So the next interest rate announcement is July 24th, so we have 6 weeks from now. Until then, the thing that was surprising for when this rate cut happens is I thought they would probably cut closer to July, but now we still have, what is equivalent to maybe 20 to 30 days remaining of the spring market, because the spring market kind of ends once the kids are out of school. Around like June 22nd this year, I think, so we're going to have a little bit of momentum towards the tail end of spring. How much that is TBD. July tends to still have some activity, especially in the Kono space, but not so much in the freehold space. But I wonder if this sentiment change with the rate cuts happening is going to move the needle, because affordability hasn't changed with this rate cut. It really hasn't. Like the fixed rates came down a smidgen, and I think people are going competitive with their rates, but the affordability is still at like 5% on 3-year fix plus the stress test, which is like a 7-something%. So it's not that people can buy more homes, it's that what this rate cut signals is that, hey, we're done raising interest rates, no more head fakes, because they're talking about cutting than they raised last year in 2023. They're talking about 5 cuts at the start of this year, but now there's officially a cut. It's like bam wham. Finally, we're starting that process towards lower interest rates, and that will change sentiment. Is it going to move the needle enough where that prices are going to go up and call it the 60-90 days? The answer is no, right? Because when I show you this chart over here, you can kind of see that May, so like a week ago, ended with 21,000 active listings. This is how many listings are available to be purchased. I haven't seen 21,000 since they brought in the foreign buyer tax in 2017 in April, and then nothing since then, even before the GFC, which tells me and tells you what, one, a dinosaur it is real estate industry, but 2, this is a lot of inventory in the GTA, so prices aren't going to move up until this stuff starts being absorbed, right? And I'll talk more about that tomorrow on the Market Watch video, but this is what I'm watching, because active inventory in the month of inventory is what dictates prices for the next 60 to 90 days. The sentiment will change with the interest rate cut, but is it going to move the needle that quickly? I don't think so. This is way too much inventory to absorb right now. The thing I will mention here is that there is a lot of pinta buyers. I do not deny that,